As expected, the Fed did move on interest rates yesterday, moving its overnight interest rate by a quarter of a percentage point to the 5 to 5.25% range. The Fed now has boosted its rates by a full 5 percentage points in 10 meetings since March 2022. At the press conference following the release, the Fed Chairman Jerome Powell said inflation remained the chief concern and that it was too soon to say with certainty that the rate cycle is over. That said, market commentators noted one change in the FOMC statement. The phrase anticipates further rate increases. That's been dropped. It doesn't mean that it's the end of the tightening cycle, but that from now on, each policy decision will be an open question. Jerome Powell also pushed back the possibility of a rate cut this year. Now, one of the big moves that we saw was the euro-dollar trade. This is the daily trade, and you can see we're bumping up against resistance at 110.96. And if and when we break that, it would then move the euro-dollar trade to levels not seen since the 31st of March 2022. Cutting it down into 1 hour segments, you can see here yesterday, that candle there was the point at which interest rates were raised. And we heard that there's no prospect of an interest rate cut this year. And since then, we've seen money going into the euro dollar. So let's just assume that there is a continuation of this trend in place, and ahead of the ECB interest rate decision, you'd want to be long on this. If you are long at 110.82, your stop would go underneath the 110 level if you're a day trader, nice and tight. And your price target now, if we get a beat of this level of resistance at 110.96, 111.80 is the next line to watch out for, with the highs we saw back at the back end of March 2022. Now, the point about all this is the fact that many are now considering that a recession is now potentially more likely. With that loss in the dollar trade, we've seen a new all-time record high for the price of gold, punching through this 2075, giving us a new high for gold at 2082.7. So I can move that up there. Take a look at that. Since then, we've seen a little bit of a pullback, but I think this increased chances of recession has really affected many of these large commodity markets. This is Brent. Yesterday, moving down to levels not seen since the 20th of March. And in fact, we got a market close yesterday at the lowest close we've seen since December 2021. So we're knocking on 18-month lows for the price of oil, falling further of analysts weighing the increased chances of recession. Just to add to this, US crude inventories yesterday fell for a third week in a row by 1.3 million barrels, according to the EIA. That was something that should have seen a little bit of a bounce in the price for, but didn't, because oil has been dominated by these fears about a potential global recession because of rising interest rates.